Thank you. You may have your seats. Hello, panelists, specially invited guests, members, staff, welcome. My name is Joy Stephen James, and I excitedly welcome you to SLUWCU Talks, the first of its kind, only offered by the St. Lucia Workers Credit Union. I am excited. Why? I am excited for the educational discussions that we will have this evening. And as SLUWCU Talks, its series continue. This evening, we will have some dynamic discussions from 3 professionals in the field of the credit union and other financial services sector. They will speak with us on the evolution of the financial services framework, particularly as it pertains to the credit unions. They will share with us also on the legal and regulatory framework, as well as the digital transformation of the credit union. So I invite you all to enjoy this engagement. After all the deliveries have been done, we will further engage with a few questions and see how we can understand or embrace the changes that are occurring within the credit unions sector or landscape locally and regionally. Our first speaker this evening is no other than Mr. Melvin Edwards, Program Director of the Caribbean Development Educator Program for Credit Unions. He is a World Council of Credit Unions Distinguished Service Awardee. I now invite you, Mr. Edwards, to take us through the history of the development of the credit union landscape locally, that is in St. Lucia and the region, as well as how that development has changed the financial services landscape that we now operate in. Mr. Edwards.
Thank you very much, Mistress of Ceremony. It's a pleasure to be here. Allow me to also compliment the board and management of St. Lucia Workers for initiating this series of discussions, SLUWCU Talks. Certainly, I think the idea is to talk, but also to walk the talk eventually. The remit given to me in terms of speaking to the evolution of the credit union movement, it's a long task, but I wouldn't profess to have the full history of this movement. I'm aware that it started in 1946. The movement evolved largely from the churches, the Catholic Church, as well as from associations, especially the friendly societies, as well as community-based, especially in the rural communities. The SLUWCU Credit Union prides itself as being the oldest of the existing credit unions. So that is the picture. By and large, there was something like, at one stage, over 25 registered credit unions in St. Lucia. The idea was to register credit unions as a form of helping poorer persons, working class persons to access financial services, to pool their services together because of their inability to access banking services that easily. The credit union sector at that time was largely volunteer-driven. When they employed persons, it started at the bottom, a clerk. Later on, maybe a middle management officer. So the boards and the committees really ran these institutions. It was around the 1960s when the employee-based credit unions, like civil service and later on police and teachers, came into being, that the whole question of hiring full-time management came to the fore. And then you see a shift towards much more structured approaches to operations. The movement was governed by colonial legislation. It was called an ordinance, which goes back to English colonial legislation which was initiated in India first, and later on in Jamaica in 1942. That was basically Xeroxed and sent to St. Lucia, changed the name, change of your faces, but it's the same legislation. That law was the base, was the framework and the regulations under which the registrar of credit unions and other cooperatives oversaw, supervised the movement. So basically, the credit unions fell within the Ministry of Agriculture for its first 40 years and continuing. So the financial component was not as strong as we know it today, because it was basically a registrar who had skills basically in understanding the law, but heavily in terms of association management, association oversight. With the 1999 legislation coming into place, and that took about 9 years to happen out of consultations on continuous drafts, the whole framework of tighter regulation, tighter operations came into being. But at the same time, the registrar was still the registrar in the Ministry of Agriculture, by and large. A few cabinet changes, it might have fallen in another ministry, but by and large, it was that type of juxtaposition to the farmer, fisher, taxi type of cooperatives. So the growth was driven largely by the quality and the caliber of leadership at the board level. The growth was driven also by the bond within which they fell. To put it in simple English, those credit unions who had what we call payroll deduction, especially from the government's payroll check every month, they were able to thrive better than the others that were community-based. Eventually, some of the community-based ones like Choiseul, Labrie, Mikud at the time, which eventually was overtaken by Monrepo, they were able to get teachers, police officers, civil servants to have their payroll deduction done directly to the credit union. But it took some negotiation and some lobbying. Then came the 1999 legislation eventually. It was consensus legislation. Interestingly, the credit union is one of the few sectors where in the OECS and Barbados, the legislation that goes to Parliament was non-controversial. Both opposition and government were unanimous in their support of the legislation, and this was the case in St. Lucia, in that it was not only harmonized, in other words, Section 25 in St. Lucia was the same as Section 25 in St. Vincent or St. Kitts Nevis or Antigua. It was crafted so that the whole OECS drive, you could have freedom of movement, and if a person moved in terms of the professional as well as the members, the reference to the document would be the same. Fact is, however, since 1999, moving on, 10 years later, because of so many changes, the whole question of e-commerce, the question of the need for credit unions as they were growing, there was significant growth during the 1990s, with the advent especially of two things: computerization, as well as the advent of full-time managers. That saw some credit unions taking off in St. Lucia in terms of what they called at the central bank at one stage exponential growth. Between 1990 and 2000, if you look at the data, the movement statistics in St. Lucia doubled, especially in terms of assets, lending, and membership. Promotion helped a big way. Between 2000 and 2010, virtually the same trend. And I was looking at data from 2014 to 2021. And again, the sector doubled. In a nutshell, well, it's a big nutshell, actually. It's a calabash shell. The movement in St. Lucia is now $1.6 billion EC worth. And I'm speaking to 2021 data. 2022 is not yet available. The impact of COVID may have affected the growth rate, but St. Lucia is now the largest in the OECS in terms of membership, in terms of assets, and important in terms of employees, because we are a critical part of the job market. So people are seeing a good occupation, a good profession in the credit union sector, which was not the case 15 years ago. We are seeing more people coming into middle management and top management. And in terms of the board and committees, elected committees, there's also similar professionalization, because to oversee these millions require a certain mix of skills, caliber, disposition, and, of course, commitment. If that is enough background data, because I could kill you with history tonight, but I don't think you really want that. It's basically to kind of tread the path that we have come. Dominica dominated the OECS for quite a long while. It was the largest movement. Interestingly now, St. Lucia is first, Grenada is now number 2, and Dominica is number 3. Dominica is still the only country that has more people in the movement than the population. Dominicans overseas stick with their credit unions. So the whole question of marketing is another factor that this tells us, that what we call the diaspora is a critical part of the membership base, the common bond that we need to explore, exploit more if you want to be competitive. By now you'll understand that what I'm saying is that the purpose behind credit unions is simply to improve lives through access to finance. But as competition tightens, that access to finance has to be intelligent. So if you wish, it is improving lives through intelligent finance. The belief of the movement is one of the uniquenesses. It's based on values, based on certain philosophical principles. In a nutshell, we believe that all people should have access to financial services that are affordable, reliable, and sustainable, because we want the movement to be around for the next 73 years. How it's being done is by promoting financial inclusion, tackling economic democracy, and making sure that we pool resources voluntarily, but in a greater proportion. So a big component, in addition to financial discipline, is to make sure that this movement is autonomous. Sometimes we spend a lot of time on the social components of the sector, but I think it's important that we see the evolution of this movement so far to being potentially a key pillar for independence in St. Lucia. Country's what, 43 years in independence? But the credit union movement has the potential as an indigenous movement to be a strong pillar for building the new economy or the emerging economy of St. Lucia from the traditional structure that we've had. With 120,000 members or account holders, some of them have dual and triple membership, something like 310 employees who report to 110 elected leaders. It's interesting to note that the 7 largest credit unions account for 86% of the national assets. Let's go to the qualitatives now. Right? So the SKU is something we need to note. That there's some large and medium-sized ones, and there's some micro credit unions. So the democracy of registering, if we're going forward, needs to be managed by the good sense of being able to provide sustainable financial services to the populace. Capitalization is good. Based on the numbers we saw up to 2020, the movement in aggregate had 16.5% institutional capital and 5.5% in permanent shares, which is pretty good. But there are some credit unions which are undercapitalized. The spread of the sector, I'm using the word sector deliberately because this is where we should be, beyond just being a movement, is unparalleled. It's another uniqueness. 25 branches island-wide. Yeah? Again, that gives us a good access to communities as well as to the urban areas, Soufriere, Vieux-Fort, Castries. The point is that if the credit unions, and I hope I'm going well for time, if the credit unions see themselves as the best ally in the financial market for the consumer, for the working class people, they have an advantage that they can exploit. Fact is, more and more citizens are choosing credit unions as places where the fees and charges are less onerous, where the deposit rates are better, and where the service is more friendly, more intimate. However, we can't take it for granted because the private sector, the banks, are also stepping up their game. The point, though, credit unions believe in knowing your member, and therefore it calls for much better management of the data, data analytics, greater research so that we can be on top. And on that note, I speak to the whole question of financial reporting being timely. Another point I would need to stress is that our philosophy, our law, requires member education as a standard investment in the members, hence the development fund. St. Lucia has over 200 development educators, DEs. The question is, have they been let loose to return that investment to the 110,000 members who need to be much more literate on financial matters? We invest in conferences, we invest in training programs, but that's different to the member engagement, the member education, which is critical if we're going to be more competitive, if the history of tomorrow is going to be even greater, heading to the year 2030. Point is, my friends, the more enlightened our members are, the more empowered they would be in financial matters of their own. And the better informed and enlightened they are, the better managed and better governed your credit union shall be. Because they'll be asking intelligent questions, and the board and management had better come good, so to speak. Operational efficiencies, again, is another area that we need to tighten on. We've heard a lot about the delinquency. 14% as against the standard of 5%. You may get comfort in that some commercial banks are higher than that, but they can afford it. We can't. Our recovery rate is less than 50% aggregate. That is where the efficiency is, and we got to do better. So the loan underwriting is a challenge that we have to deal with as leaders of the sector that are going to change the landscape. So the whole market value and the recoverable value of the loans is a key facet that we need to ensure we improve on. According to the FSRA, at the end of December 2019, 7 of the 16 credit unions were IFRS compliant. In other words, 9 were not. I hope through the league and through the through the FSRA, that figure has improved. But again, it speaks to competencies. In this day and age, trading in people's money requires that you're complying with the standards. And your audit, I'm sure, will not be unqualified if you're not IFRS compliant in this day and age. And those rules are going to be changing, including this year IFRS 17. Fit and proper executives is key if we're talking good governance. The facility by which we could appoint or elect persons to the board, whether through the nominations committee or from the floor, that's the democracy. That has to be balanced by the person's competences. That has to be balanced by their disposition and commitment. And therefore, good governance is going to be critical if the credentials of the persons who lead this movement are going to be unquestionable. So we need to tighten up in terms of the rules or the guidelines that will govern our nomination committees and the time by which they are appointed to identify and mobilize and train people. Succession is another issue that will change the game. There are some clauses in your law that try to stem the trend of perpetual directors for life, but they are cute. They know how to do the roundabout, you know, to move from one board to another committee and then come back around. The point is we need to grow more leaders. We need to grow more competent persons. And it's simply through training, good recruitment, good identification. And linked to that is also the facility by which I could come off the board today and go straight into employment in management of a credit union or a co-op. Again, you come with baggage. Or to leave management and go straight onto the board of the credit union. That is not good governance. There should be at least a hiatus where you could, as I say, debrief or detox before you could, again, take that level of executive. So that nexus between the elected and the executive hired persons need to be changed. I've been preaching across the region, and I'm not too popular on it, that on every board of a credit union in this day and age, there should be at least one person under 35 years. If we're going to sustain this movement, if the younger persons are going to gain from the experience and the know-how, the knowledge of the older folks, they need to be in the boardroom. The other reason is that young people, when they see directors up here on the stage who look like them, will gravitate to the credit unions. If they don't, if they look like me, they're not going to come to it. So the point is we need to balance that, educate the young people, and absorb them into the movement so that we really represent 110,000 St. Lucians. My last point is this: advocacy, which includes negotiation. We are not preaching enough to the policymakers. We tend to wait for them to come to us. There's some unique things in the legislation that apply to this sector that we are not leveraging. For instance, number one, the power of nomination. I would bet you that 60% of the membership of the movement do not know that they can appoint their beneficiary through the credit union or beneficiaries. And when death do their part, their beneficiaries do not have to go to a lawyer to get probate. Once the records of the credit union are accurate and up to date, the funds due to them, without any limit, can be disbursed. That is across this region, except in Trinidad and Tobago, where there's a limit of 50,000 TT dollars, which is less than 25,000 EC dollars. That's a major advantage. And I will tell you, in some cases, credit union managers or staff don't advise members enough. They have to go and get the will when they don't need it, for the law is clear. Section 100 of the law is very clear, the power of nomination. That's a major benefit. Shared services. Credit unions can share their back office. They can have the same accountant. They can have the same computer software. Because that is what the philosophy drives to. It cuts the cost of operation and it allows the members better products, perhaps greater dividends. At the same time, legislation, we are still in 2022, let's say 2023, operating on the 1999 legislation. If I may, I believe our posture as advocates tend to be reacting to the legislation sent to us, as against promoting the legislation we want, so we can lobby the government of the day to give us the legislation. I've seen at least 6 drafts in the last 10 years. I'm told there's one that was due to be passed in August of this year. We're in Credit Union Month, and it's still somewhere on a shelf. The point I'm making is the advocacy at the top is soft. Hope I remain your friends. My last point is this. Up to now, if we want to compete in the market with the $1.2 billion worth of assets under management, under governance, serving at least 100,000 St. Lucians, no credit union in St. Lucia can issue a check in its own name. No credit union can issue a debit card, contactless or contactful, in its own name. It has to go through a bank. Any credit union to be registered in St. Lucia must have a bank account. That's in the law. And I'm saying, after 76 years, we need to act our age, as the Calypso says. If the politicians are our servants, the lobby is not there to say, we have the capacity to be able to be at the clearings, the ACH. And that discussion is happening all across this region. I was in St. Kitts last week, the same thing. But I'm saying we don't lobby enough our ministers of finance and say to them, like Barbados has done. Prime Minister Mayor Motley has said to the central bank, you can't continue to exclude the credit unions from the financial space because it is discrimination. And 2 credit unions have been now appointed, well, agreed to be on the ACH. All 16 can't be there, but at least one can be the clearing for the rest of the sector in conjunction with the league, if the league has that kind of capacity. I close on that point by basically saying, mindful of the environment we're in, where the debt to GDP in St. Lucia, based on the last data I'm seeing from the East Caribbean Central Bank, is 91%. That's pretty high. And inflation, you know, is not staying anywhere close to 2 or 3%. It's on the rise. There's some serious work that we have to do, based on the history from which we have come, to change the path so that by 2030, you know, we can have a strong, dynamic, and robust system that could be transforming the financial sector of St. Lucia. Thank you very much.
Well, if that was not a history lesson, I don't know what was or what is. Thank you so much, Mr. Edwards, for this history lesson on the evolution of credit unions within our region and St. Lucia. And you have basically set the platform really well for our next speaker, who will speak to us on the need for sustainability, the need to remain relevant, and the need to be competitive. To do so, there are steps that need to be taken, and I believe of interest to the movement at this point is the need for digitalization. So to take us through this discussion, we have Mr. Zephyrin Francis, financial and management consultant, has years of experience within the credit union movement, to share with us on digitalization, digital transformation, and how it could add value to the credit union movement. Mr. Francis.
Good evening. Thank you, Mr. Ceremony. I think sticking with credit union talk, I think is a great idea. And of course, it is the mechanism through which we get our information out to the members and to the staff. So I presume all credit unions need to move in direction and hope. I think Melvin emphasized it, education. And that's part of the policy of the credit union movement. My area of focus today is credit unions, digitization, digitalization, and digital transformation. Digitalization and digitalization goes hand in hand. One is the beginning, the assumption of information, whereby you transform from text to digit. So you now scan information and you build it. And what that leads to is what we call digitalization. So you now have your information in a format that can move across a platform. Digitalization, as we know it, is the conversion of text, pictures, and songs into a digital form that can be processed by technology. As I said earlier on, that is digitalization. So they both lead to the process of converting information into a digital format that can be used on various platforms, example, smartphones, laptops, etc. My focus today will be on digital transformation, because currently that's where the credit union is at. If credit unions have not transformed from the old system and digitize and digitalization, then they're not in the times. Serious problem. So digital transformation is where we are at this point in time. And I want to ask a few questions, but we will deal with it at the end of the presentation because I want to emphasize what digital transformation is. Do we know the services that are now available to us in our credit unions? Are they being used? What are the benefits or impact? Then I will go to what are the challenges and benefits of online versus in person. As I said, we will discuss that at the end of my presentation. Understanding digital transformation. I would say digital transformation is one, optimizing digital technologies to increase efficiency, responsiveness, and meeting the needs of membership, management, and staff. Improve operations and more data-driven policy insight. Of course, that tells you the backbone, because that is the foundation of the organization. Three, I would say developing a strategy to integrate data analytics into the credit union work program. And four, enhance streaming capacity and enable stimulus live streaming on different platforms, internally and externally. Internally meaning that we have enough data on our members, but do we have the application on the software that we can, at the press of a button, get a status on an individual internally? Now, of course, you have your loan departments, they focus on loans. You have marketing, which focuses on the marketing. But if you have data transformation within your organization that is up to date, that information goes straight across platforms. And the other part is externally, which is Facebook, YouTube. And I want to tell you, with digital transformation, you have got to create no new database, because your data internally can serve these external platforms right away. So you don't have to go and create a Facebook or a YouTube. Your database flows into your YouTube and Facebook, etc. But in understanding digital transformation, this is where management, directors, and things have to come into play to understand. Because digital transformation leads to organization effectiveness and development, which are, I would quote 4 areas: a competent, highly skilled, engaging, and caring staff who are focused on service excellence, teamwork, accountability, and result-oriented. 2, an operating environment that supports creativity, innovation, development, and members' well-being. 3, a responsive board of directors and management that meet the needs of its membership and partners and/or associates. And fourthly, a culture of continuous learning and professional development. Now, I've been talking about digital transformation, but I want to use it in the credit union context. So I'm going to call it credit union transformation. And that's because of 3 factors. 1, value creation, member satisfaction, and credit union continuity. Value creation is providing an environment that enhances the atmosphere and experience of the members, directors, management, staffing, while satisfying their demands and needs. Member satisfactions are services, benefits, and confidence about the future. Credit union continuity are associated with goals, plans, growth, and meeting the challenges confronting the movement in this ever-changing environment. So, having a broad picture as to what we need to do to make sure we remain relevant, I had to look at the financial situation of Workers' Credit Union, if that's where I'm going to make that presentation. And after reviewing the financial statements, I am convinced that the credit union is on the right path for growth. I have to say, soon to be $100 million plus credit union, because as of 2021, it was $88 million, and the previous year, they grew by 12 million. So if they grow at that same rate, they will be 100 plus million at the end of 2022. That growth can be, I think Melvin mentioned it earlier, leaps and bounds with members' satisfaction while enhancing visibility through marketing strategy and products. What I'm saying is that you already have the base, you already have the foundation, is how do you market to some of your members? And we can go back to that in the discussion, because remember I spoke about online and in person. So we can go back to that. And 2, the proper management of loan portfolios by using the information to enhance communication, then with members and with the various tools. What I'm seeing here too, when I looked at the financial statement, is that most credit unions went through crunch time in 2020, 2021 because of the pandemic. Now, of course, we have what we say, loans are delinquent, and we say, well, 3 months and this. But technology has given us the tools and data transformation that right now, across your platform, if a member 1 month or 3 weeks has not met an obligation, a red flag can come up by you putting in the database. It doesn't mean they're delinquent, but it gives you the tools to say, hey member, I realize you have not come in, we're just giving you a call. Or you have the facility of email to a member saying, we haven't heard from you in 4 weeks, just check in. Because they have not defaulted, but you can sense from the data it is going to develop. So the technology is not new. We already have it in our database. It's using it, finding out how now to utilize it. And I say we could do that through reminders, email, call in, review, and they would appreciate it because that way you're going to assist. Now, I focus on the loan portfolio because we have a problem in the credit unions now. People who are coming into the space who are not regulated like credit unions, but they're in the same business, like the fast cash, like courts. Now, what they are doing, quick money, high interest, and it was high risk. But as Melvin mentioned earlier on, we have public servants We have people with salary who are now going to these institutions for $2,000 and $3,000. And what they're doing? Providing a salary deduction, which is now doing a disservice to the credit union, because the credit union before was collecting your salary, which was your net pay. So if these deductions are going to these non-financial institutions, they're already charging you a high interest. And they don't care about your welfare, because whereas in the credit union, we will tell you you're borrowed too high based on your income, so we will advise you, you hold back a bit. These institutions are not going to hold you back, because they're going to tell you, here's the money. And of course, it will take you 5 months to realize the problem. And then now you come back to your credit union and say, can you help me because I'm a member, that's my organization. And of course, we bend backwards. I am going to use my experience for the last year with COVID and traveling to show how technology and the way forward is the way to go. Applications, which we call apps, are on our device of mine. Online banking and debit and credit cards. Those of us in the credit unions who are using online banking know the benefits. But have we educated all the members to understand online banking? I'll tell you, I'm in America, I'm in Barbados, and I work out of Antigua. Let me tell you, online banking, I can move money through my credit union, and both of them. Now, Melvin, I need to correct. In the law in St. Lucia, you're only allowed to be in 2 credit unions, not 3. So anybody who is in 3 credit union is breaking the rules. All right? But so I can tell you I have 2 credit unions. And it serves beautifully because I can transfer money. And with the debit card, what a luxury. I can tell you when you're overseas. Because I move money from my deposit account to that debit card, and I can do, whether it's airline ticket, whatever. So here's the thing. My traveling in the US and other territories, what technology has taught me is that booking and confirmation are done online or kiosks. Even going to the cinema, I do it online. There's a movie, Woman King. I had to see it before I come down. Great movie, if any of you will have the chance. And you know the rush to go. So I stayed at the house, checked the cinema, said, yeah, what times? They give you the times of movies playing, they give you the cost. So I said, yeah, I want 2 tickets. Then they give you seat assignment. They give you the whole cinema. They show you who took up the seats already and what seats are available. And it's $7 per person. But they charge you a $2 fee because of the luxury. I want to go on the line. I want to usually tell me the place full. So I did that, and I choose the appropriate time. Now, all that, we have that facility in the credit unions. I used it because I have online banking, and I have my debit cards from both credit unions, so, which is a plus. The other thing is that airline, I mean, now when I travel, I hardly deal with anybody. I mean, especially from America. You go to the kiosk, well, first at home, I go in there, put in my name and my confirmation number. I go to a kiosk, I put in my debit card. I have 2 bags or 1 bag, they charge me. I get my boarding pass, I get my bag tag, right then. So I just put my bag on a belt, and I just go in, immigration, they check my, and that's it. I never interact with one person and everything. When I got on the plane, as soon as I put my headphone, he said, welcome, Mr. Francis. They didn't even know you by your seat number. So that is technology. Now we have to find a way to explain that to some of our members. Because remember, the young people want it, but our old people, they still believe in banking. So we have to sell, because it's changing. Whether we like it or not, it is changing. So that's some of my experience. So in summary, what are the threats internally and externally confronting the credit union. I can tell you, legislation, reporting, financial and standard requirements. One of the reportings I think we have not looked at seriously is that credit bureau. Whether we like it or not, it's coming. It's either we become an owner or we'll be a supplier of information. And we can be both, because the law will force us to provide information. And if it belongs to somebody else, we will have to pay when we want information. So we have to know what we're doing. We need to put the rights. And as I was saying, I brought my boarding pass to show you the luxury. Eh? All that was done by me. Even my bag tag, I put it at the back. Never saw nobody. So coming back to what's the threats. The other thing, I think Melvin mentioned it, is understanding the new financial landscape. Electronic wallet, cashless transaction, cryptocurrency, Bitcoin, new non-regulated competitors, like I said earlier on, courts, fast cash. These are our competitors, this is our external threats. So in closing, our credit unions are aware the World Bank funded a Caribbean digital transformation project. Are we aware of that? Well, let me tell you, there is such a project which is being coordinated by the OECS Commission. So in fact, the World Bank has literally put money into the OECS for us to go head in that direction. And here's the objective. The objective of the project, to increase access to digital services, technologies, and skills by government, businesses, and individuals within the OECS. So we qualify. I want to go down further to tell you. Basically, the project consists of 3 components. Digital ecosystem, which you know is parent, ECCB, ECTEL because of communication, and CARICOM have something called impacts. Now I know impacts have a bad term, but impacts mean Implementation Agency for Crime and Security. That's a special agency created that would be looking at crime and security, which is our area for money laundering and these areas. So they would be part of the project. The second component is digital infrastructure, platforms and services. And third, digital skills and technology adoption. So the last 2 areas is our area, is our bill. And we already have the heads up. Now, I have a couple of minutes just for me to, Melvin said something that I need to raise and touch, is that central bank have amended the law to facilitate credit unions in being part of the clearinghouse. Have we understood that? And what initiative have we taken? Because what is happening? Melvin said $1.2 billion, but where do you think it's sitting? In the bank, the same bank. Right? So it's sitting in the bank. So we now have to, now, it's true, all of us do not have the expertise, but we can co-op, we can partner, and bring in the people who understand what's happening. Because St. Lucia is home. When you work for a regional organization, you're helping everybody else. Who say you don't want to help whom? And at the end of the day, it's proud when you go somewhere. Because I was in Texas and I was on a program, and the guy said, he's from St. Lucia. That made me feel, I said, but what a man doing Texas and from St. Lucia talking about technology? So these are the things that comes home, it hits home. So I want us now to look, where are we taking the movement? Because the movement is taking off. Whether we like it or not, it is moving. And if we do not move with it, our members are going to find alternatives. And if our members are going to non-regulated financial institutions for quick money, they will go to other avenues that will provide the service that we cannot provide. But internally, we need to understand our organization is member-friendly. So we now have to talk to them. Why in person and the benefits of online? On that note, I want to thank you and hope we could have further discussion, because at the end of the day, your questions will bring up, because you know when you have so much information, it takes questions for certain things to come out. So thank you very much, and I'll thank Credit Talk for having us on the panel.
So we leave this to Ms. Polius to give us a little more insight into.
Good evening, everyone, and thanks very much for having us. We at the Central Bank look forward to opportunities like these to engage with, though we're not a regulator of credit unions, but to engage with financial institutions and stakeholders across the financial space to know exactly what are some of the policy concerns that people have and what are some of the issues that people are top of mind for our stakeholders, so that we could be thinking about those things when we do our policy work. So thanks very much for having me, and I will go right into the presentation. Nice. Give me a little issue in advancing. So by way of introduction, this presentation will look at the changing global environment and the emerging financial landscape that financial institutions have to operate within. We'll talk a little bit about, the performance of the credit union sector, but Mr. Edwards has dealt with that, so I will not spend much time on that. And what are some of the implications of what has happened in the last 2 years, in particular, the COVID-19 pandemic on the credit union sector, and what are some of the strategies that the sector could employ in terms of ensuring stability of the sector and sustainability. I'll touch a little bit on the regulation of the sector, but not too much, because we have some feedback, and I suspect it's because you have two machines in one. I'm not sure, but I'm getting some feedback. Yeah, so I will speak a little bit about regulation of the sector, but this is, there are some proposals that have not been heard by the Monetary Council, so it's not, which is the highest governing body of the bank, which is something, because they've not been heard, I can't say. A little bit about environment. We're just emerging from the global pandemic, as you are aware, starting from 2020, the COVID-19 pandemic, and with that has come with supply chain disruptions, which has brought about some inflation. We have, importantly, the changing dynamics of work, and I think that's something that all institutions have to take some consideration, which would be the whole remote work and work from home dynamic. And then we have, of course, the long-term impact of COVID on the labor force, which we're not sure about in terms of the health impact of COVID-19. And then internationally, we also have the geopolitical risk, or the geopolitical landscape, where we have a number of emerging conflicts like Russia, Ukraine war, North Korea, and the missile tests over Japan and South Korea, and of course the China-Taiwan dynamics. These all have implications for the economic environment within which we operate. And last by no means least, these two things that I've just highlighted means that there, especially the geopolitical landscape, means that there are weaker prospects for global growth. The IMF has just recently lowered their projection for growth for 2022 to I think about 3.6%. We have significant commodity prices. Oil prices, OPEC has just recently cut production by half yesterday. And so oil prices are going back up. They have started coming down, but they are going back up, right? And post-COVID, we are going to see some wage pressures with people asking for wage increases, given the significant inflation that we've seen, we're all experiencing in the supermarkets. And of course, we have the impact of climate change on portfolios of financial institutions, because those have to be insured. When you have hurricanes, these impact the portfolio as well. And so we have those climate risks within the portfolios. So the changing financial landscape, and I will address that because the environment within which credit unions, banks, all insurance companies, all financial institutions operate are changing. That environment is changing. And financial institutions must essentially navigate an environment that is characterized by weaker economic growth post-COVID, but also the introduction of financial technology, and you have to couple with that very fragile job markets, right? We have a situation of rising indebtedness within our economies. Most people are highly leveraged. Household debt is increasing, and along that, with financial mechanism and the shadow banking system evolving to support that increasing indebtedness. So we have the payday lenders, as have been indicated before. We have courts ready finance and a number of new vehicles emerging to support, rising indebtedness and the pressure that people are feeling right now. We have increasing regulatory scrutiny of financial institutions, and that is driven by external governments. I think I have that twice here. Even increasing always tax haven status, that. We have changed business models due to digitalization and financial technology. And we also have increasing reinsurance costs and changing underwriting methodologies. And you may ask why I have that here, because I'm speaking to credit unions. But of course, that impacts the credit unions and banks, because for your mortgage portfolio, you require insurance, right? And the way in which underwriting is taking place is becoming a lot more stringent. So, and that is increasing the cost of insurance and has implications for mortgage finance. And then we have international regulatory challenges, IFRS 9, though recently there's been some accommodation to treat credit unions like small enterprises. And we have, of course, AML, CFT regulation. So it's quite a lot happening within the financial space, and credit unions must balance all of that while seeking to ensure that they are stable and that they have sustainable business models. So some stylized facts on the credit union sector in St. Lucia. We've been seeing increasing growth of the sector by way of assets over the years. But just recently, and though I don't trust that data so much because that's as of March 2022, and that data can change, we're seeing that the rate of growth in terms of assets and loans is slowing. So the rate at which assets and loans for the sector in St. Lucia is growing is slowing down a bit, and that is something that we need to take into consideration. Similarly, the rate at which deposits are growing for St. Lucia, although it's growing, that is slowing as well compared to that for the currency union. For the currency union, the OECS grouping, it's increasing. And non-performing loans, of course, for St. Lucia, though it's high, it's above the 5%, it's somewhat stabilized a bit. So at the height of the pandemic, it was at 12-14%. And now, as of March, it's about 9.6, around 10%. So it's coming down, sort of stabilized, almost flat, but of course, we'd want to see that come down a bit more. In terms of membership, the membership of the credit unions in St. Lucia is growing, as well as the currency union. And I should say that over the period 2020 to 2021, we've seen significant growth, though not as much growth between 2018 and 2019, but the sector added about 12,000 members between 20 and 2021, and that's significant. So what are some of the impacts of the COVID-19 pandemic and some of the emerging issues that I've highlighted previously on the credit union sector? So we've seen on the advantages side, on the pros side, we've seen some accelerated pivot to digital operational models, though of course we'd want to see more of that. One thing we've noticed is that there is a movement from banking to credit unions in some market segments. So persons are really interested in doing business with the credit union sector. And that's very evident in St. Lucia. Like I just spoke to the numbers in terms of the increased membership. But what is more significant, what I saw in St. Lucia, the evidence of that is important, is that when you look in St. Lucia, everywhere you look, the credit unions, in terms of doing business, you will see that there is some sort of visibility, enhanced visibility. The credit union, the places of businesses look better. They've been renovated. They look more appealing and they look inviting. And that's, of course, a very naive indication of the movement and how it's doing in St. Lucia. And the size and community knowledge that the sector serves, it makes it easier to provide services. Because, of course, you know your members better. It's a more intimate setting rather than the banking. On the con side, we know that survival in a difficult market because of the pandemic and because economic circumstances are hard. And during the pandemic, you saw limited member interaction. And of course, you would have had limited preparedness for investment and some of the changes you would have required for COVID-19. How do credit unions therefore find a balance in terms of maintaining stability and ensuring sustainability of the sector in the Eastern Caribbean Currency Union and in St. Lucia in particular? I think there's an opportunity for strategic rebalance or reset for the credit union movement in St. Lucia and in the wider Eastern Caribbean, but in particular St. Lucia. Right? And the credit unions are placed in a position where they could leverage the comparative advantage that they have as a sector. And the comparative advantage is that they are member-owned and member-driven institutions. And that makes it easier because the members could really articulate their needs and they could really drive the type of business model that they'd like to see. And I think credit unions should capitalize on that comparative advantage. And when I say that, I mean that credit unions should really double down on making the financial well-being of their members their main value proposition. And I think Mervyn, though he said it in a different way earlier on, I think he spoke to that the financial well-being of the members should be the main value proposition for credit unions. And of course, that means the whole financial inclusion, the whole financial awareness and literacy and catering to the needs of the members become really important when I speak about the financial well-being, so that members are really prepared to be able to make very informed financial decisions and to make decisions that would lead to creating wealth rather than just day-to-day living from one loan to the other. There should be a focus on innovation and again leveraging the unique advantages of credit unions. You know your customers and you could cater to their needs. Credit unions outside of the region are now looking at issues such as curbside and remote delivery mechanisms to help maintain the customer base and expand the customer base. One thing I think credit unions should do is to avoid head-to-head competition with banks in a digital space. And by that I mean credit unions should endeavor to embrace digital transformation, but trying to implement all of the models that banks implement may not necessarily be the best way to go. But leveraging partnerships is one possible model that they could utilize to be able to reduce the cost of some of that transformation, and that would allow them to be both what I call high tech in terms of the digital transformation, but also high touch in terms of being in touch with their customers and their members. A renewed focus on operational efficiency. What are some of the things you could do to reduce costs and to introduce new revenue streams and to introduce new value-added products and services for your members? And to explore untapped areas and opportunities to attract members to the sector, and opportunities to enhance financial inclusion so that persons across the island have access to financial services or a suite of financial services. And one of the benefits that credit unions have is the fact that they're member owned, and unlike the banking community where people are saying that they feel excluded from the services that the banks operate, I think that there is a space here that credit unions now could leverage to broaden inclusion and broaden membership and maintain their value proposition. And finally, there should be a focus on enhancing resilience of the business, especially given climate change, looking at issues of integrating climate risk into the business continuity when we have a shock, hurricane, or whatever issue that does not allow you to be in office. So not removing totally all of the mechanisms that you had put in place during COVID, but building on them to enhance resilience. So in conclusion, though the credit unions in the Eastern Caribbean and in St. Lucia face challenges post-COVID-19, and these challenges include deployment of financial technologies, member growth, maintaining sustainability of operations, and climate risk, there exist opportunities for credit unions to meet those challenges by leveraging the unique comparative advantage in the fact by the very nature of which they are constituted, to remain true to their character and to be able to maintain their value proposition for members and address the financial well-being of their members, and for them to leverage partnerships in the digital and payment systems to deliver services to clients. So not necessarily making huge investments, but leveraging partnerships that could allow them to deploy the technology in a much more efficient and operationally efficient and cost-efficient way, but allow them to provide those services to their clients.
Input that ECCB can have within the landscape for financial sector, specifically the credit unions. And I highly doubt we may have many questions for you based on the manner in which you made your presentation, but I will leave that to the audience to decide as to what they may require some further clarification on or further insight on. At this time, we open up the forum for some questions, and I know that I will get some questions from some people in here because as presenters, we do not like to believe that we have it all together or we covered all the bases, and we would hope that something that would have been delivered would have piqued a question or two in your minds. I know it's been a long day, but engage us a bit. So I open it up to any of the panelists that you may wish to pose a question to. That includes you, staff members as well. You are free to engage the panelists in any questions that you may possibly have. You could just indicate by a show of hand if you wish to ask a question or simply make a contribution to the discussion at hand. Any questions? Any contributions?
Yeah, what I wanted to speak a little bit about some of the initiatives that ECCB is undergoing right now, which I forgot to do. So on the regulatory side, we are working on a model to address market conduct in the financial market conduct in the currency union, and by that I mean the way financial institutions conduct their business. So there's a proposal that will be going before Monetary Council to address to implement some measures or to implement a model for regulating market conduct. And that looks at ensuring that financial institutions operate in an ethical manner. That also means ensuring competition within the financial space, ensuring financial inclusion, and increasing financial literacy. The second area we are working on is an architecture for regulation of the non-bank financial sector. As you are aware, that is being regulated by the single regulatory units in each island, and that a similar way. So these are the two areas that we are really working on at the moment, and I thought I should add that as well.
For this additional information, we will just take a few questions at this point.
I'm Linda Berthier from Janu Credit Union. In order to broaden the market for credit union services, you mentioned curbside services. So I wanted some clarification as to how the credit union could be involved in such a service. Sorry, Mrs. Polius, were you able to hear my question? Oh, you're asking that I repeat it? Okay, you were referring to, you were discussing or explaining the market, how we could broaden our markets and our services as credit unions, and you were listing some innovative ideas of what we can use to increase our visibility as credit unions. And one of those you mentioned was curbside services, so I wasn't sure how that could be used in a credit union. I'm not sure if I heard you clearly, but would you be able to explain that, expound a little bit?
Yes, I can. So these services are being utilized in markets, some developed markets, by credit unions to expand services to their members. Members, for instance, in some cases, like the remote services they use for like members who may be disabled, or members or curbside services, members who are in a hurry. But those services really utilize a combination of digital methods and in-person methods. They combine those two to be able to cater to the needs of their members, and they of course come at a fee. So you may make a request for whatever you need at the credit union, and you may collect it curbside. But that you pay for, you pay additional fees for that.
Thank you. Thank you very much for your response. Thank you for your question, Ms. Berthier. Do we have any additional questions from the floor? I hope we do.
Michelson Phillips, Director, St. Lucia Workers Credit Union. The question is directed to Mr. Francis and dotted to Mr. Edward. Mr. Francis, you mentioned that legislation had been changed for clearinghouses, or the credit unions are now able to. How much work has gone into that, if any, and what do you suggest, or how do you suggest that we start, or start moving into the direction of credit unions accessing?
What has happened is that even ECCB have recognized the importance of credit unions within the OECS. And what happened is the clearinghouse means the transactions. Now, we have a league, right? Or what we call a body. Instead of all credit, because that's where collaboration is important. What is going to happen if we do not really collaborate? One or two big credit unions, and ECCB themselves have recognized, because if you notice the Dcash, it involved banks and one or two credit unions actually involved in Dcash because they realized of their financial base and their membership. So whereas ECCB have said that they are amending their things to facilitate, because when you, like Melvin mentioned early on, the size of credit unions, 100,000 members in St. Lucia, $1.2 billion. That's what you call a sizable institution. So the point is, do credit unions still have to go to the banks to do the clearing when credit unions themselves are an entity? In Dominica, credit unions are the banks in Dominica. So where do they get a clearinghouse? Because most of the indigenous banks are actually moving out. So at the end of the day, this is what you said is relevant, but we have to sit down and understand. Because I asked a question about the technology that went through the World Bank for the transformation, and it looks like nobody knows about it. And it's not now, it's there. ECCB is aware of it. ECCB is using it. ECCB is one of the pilots in the top project. As I said, ECTEL, ECCB. So it's getting the information and knowing what is out there and how we use it. So while I appreciate your point, is that have we come together to talk about it? Do we have that forum where credit unions, directors, and that's not for the general membership, but it's we that have to take the lead and find out what is out there and how best it can serve our members. Because in truth, in fact, if credit unions are clearing house through ECCB, think of another potential that really happens right now then. Because everything we do, we go through the banks. Yet we are competing with the banks. So at the end of the day, we're taking credit union members' money and we put it in the same banks that are competing with us. And if you look at the banks, the credit people are moving their money from the banks, bringing it to the credit union, and we, the leadership, is taking it and bringing it back to the bank. So the facilities are there, is that a lot of us have not gone and understand or taken the knowledge or the know-how. So it is bringing together. I mean, with technology, even if I'm not here, you could always contact and then we could say, okay, let's brainstorm. I did something with a guy here, Kurt Elliott. He met with one guy in Arizona, one in Texas, I think, and then for the betterment of St. Lucia, he called it. So we can meet anywhere with technology. Because even I have a St. Lucia background on my computer, which is Bridge Street. You swear I'm in St. Lucia when I'm somewhere else. So, and that shows up. With technology, you could do all these things. So, yes, to answer your point, it is there. I will look even further into it because the governor is a good friend of mine as well. So I could always ask him, because he put it, if you look at, and another thing we should do, ECCB put out the annual general report, which is available to us. If you go there, I am positive he'll have information on that. I can go and check it out for you, but then if we all can do it as technology. And it will tell you that ECCB is facilitating it. Okay? I don't want to go into little nuts and bolts. That's why I went around your... Thank you.
All right, I just want to ask Mr. Edwards if he wants to take a little forward question before I go to the next thing.
afternoon. Okay. Hey, good night, sorry. This question is for Mr. Francis. You mentioned about going digital. I guess you like technology. You carried your boarding pass to show us, right? So all the wonderful things about going digital. But what you didn't mention, or probably what I would like you to probably to emphasize on, the drawbacks of going digital. So probably you can share one or two with us, please.
Hello? I think it's a very good question, but in the credit union, I think in the early part of my presentation, I spoke about online versus in person. The credit union is built around membership, is member-oriented. So going online is in the age of technology, is the convenience. But what happened is that what is important, it takes away the relationship between member and organization. But technology gives us another tool now which makes it available. Whereas we do not have the in-person interaction, we have what almost like daily email, a review or call up. Now, it's not any person, the systems we have in place literally spring up this information. So at any one time, the credit union can say, there are 15 people in so-and-so area through a field, and it comes up with that list. So one of the staff members can call a person and say, we haven't seen you at the credit union, so-and-so. So talking about online, yes, but then you can now counteract it from the other. In all credit unions, there are some good members who take good loans, who basically take loans and everything. You can create a listing from data and realize that that person hasn't come for a loan in 8 months or 10 months or whatever it is, that a follow-up, because the data sends you up and say, hey, here's a good member but has not been using the services of the credit union. So everything has drawbacks, but it's how you use, because that's why we use SWOT. When I went to school, there were people talking about SWOT. Now SWOT is out of the window anymore, but it still works. It's strength and weakness, opportunity and threats. So the factors are still there. So when you say drawback, for me the drawback was, oh, I did all that with nobody. Now what happened is that there were some people who had problems. There was this lady who came to the kiosk. My God, she don't know what to do. Even when she got in, the strip came out for the bag, she did not know how to take out the part that caused it to stick together. So she was lost for almost, so these are drawbacks, like what you're saying. But of course, as I said, is education. Anything we bring to our members, we realize it has a limitation, because let me tell you, our members are getting savvy. And even if they didn't want to get savvy, people are making them savvy. Let me tell you, a lot of the stores in town are going to have problems. I mean, I came in on Tuesday. I'm going by Armour Bakery to check Armour bread. I miss Armour bread for a while, hot bread. I see a line outside. I figured maybe the bakery. No shop box or something, they have a wrong there. And let me tell you, if you see the amount of people outside, on a line, so these people are shopping online. All right? So while we're saying the drawbacks, and I hate to dwell on drawbacks because I say drawbacks should give us opportunities to take it. And that's why I'm saying for the credit union, we are going to have some members who do not understand where we go in with online banking and these things. Their customer bringing their paper, they want to see a paper. So you want to have, but it's education. We have to talk to them and tell them, here's the benefit. Because until they see the benefit, they're not going to make that move. The young people will quickly do it. But the older folks, it's going to take them a time. But it is the way to go. And I'm telling you, I am shocked by what it can do. I mean, you literally can do. I mean, in Manhattan, when you go and take a bus, the terminal tells you where the next bus is and how long. So if you have 7 minutes and you don't want to wait for that bus, you go across the street and it says the bus is coming in 2 minutes and it's going. Now, they don't have it in Brooklyn because Brooklyn still, but now, hey, that, in the same America, but Brooklyn seems to be a little mile away compared to Manhattan. So Manhattan have all the sophistication. Brooklyn have the same transport system without all the sophistication. So it's how we use it. Good.
Yes, just to reinforce what Mr. Francis indicated, in every environment that we speak or change, specifically digitizing, moving forward, there seems to be quite a bit of pushback, and from different age groups. And the key to this is really and truly continued sensitization. Sensitization at different levels. Different individuals need to be spoken to at very different levels. And as this credit union movement commences and those conversations begin, it is important that there is a recognition that the approach needs to be at different levels if you are going to get the buy-in that you're looking for. So I advise or encourage that the implementation of such directions be done at different levels.
Okay. Good evening again. This question is for Mr. Edwards. I think I heard you mention what sort of financial services are we offering our members? Are you speaking of developing more, or are we looking at our insurances or whatever financial services we have in-house?
I'm responding to what you may have picked up. But in a general sense, credit unions offer a suite of services. Some offer more than others. But the time has come where the products and services we offer should be a much wider band because of the different demographics that we serve. We heard Tracy speak to curbside products. In St. Kitts, the St. Kitts Credit Union has a drive-through, more than 10 years now, long before Kentucky. And you drove through and basically you do your nighttime deposits, you do your whatever you need, day and night. The whole question of services for the disabled as well. COVID taught us a lot of innovative things that we could do, that we can continue to do in terms of delivering services to the members. One of the key things is lending money. And that's where the competition is beating us, especially the payday lenders. They are selling. The mode in the credit union is still, we are waiting for appointments to come to us. We can learn from the insurance sector, where they go after persons. You'll be surprised to know they know when every person has come back from university to begin to sell them a life policy. So the whole question of data mining again, in terms of going after the market, the specific demographics, we need to be much more aggressive at selling. And I want to go back to another component of that, which has to do with, again, the cost of technology. I mean, Zephyrin is right. It's nice, it's going to be important, we need to engage and sensitize more, but it costs money. And it is not possible for Saltibus or Fond Saint-Jacques to have the same platform and capacity as, say, Jano or St. Lucia workers. It costs a lot of money. And the upgrades from time to time also cost, including also the staff. So why can't we, as good corporators, joint venture, to afford the technology, to bring that convenience to the members? Because there are many other products that could come through. Can we foresee, to be subjective, St. Lucia workers and Janu partnering? Could you imagine the power in the market? I didn't say merge, eh? that has its own, but you can partner, particularly for the backroom services, and bring the cost of doing business down. It isn't about, I've learned in this thing called mergers and amalgamations that you don't touch the politicians in the movement. Everybody wants to be still president and treasurer, no offense meant. But the point is, you could do it gradually. But if the member, as Tracy Pollier said, is our primary focus and beneficiary for the best interests of the members, and if we educate them more, they would have no problem with that form of collaboration because they stand to benefit. And therefore, the more we do so, compliance was another crisis. We react to crises, you see. You remember Y2K? 1999, everybody went and shifted. You remember CLICO? Sale Financial? In another island, Stanford? Likewise, IFRS 9. So we've been reacting as against proacting. And I mean, to hear Tracy from the central bank saying it, we have not leveraged our value proposition enough. And the two biggest ones are P5, education, ongoing education and training, and P6, cooperation among cooperatives. If we do that, we could penetrate much more. And I really believe that we are the only sector where mergers can be, they don't have to be hostile or forced by the regulator. But I could tell you, with 16 credit unions, if you want to do a better job in getting those products and services, Mitch, to the members, we need to consolidate. Because 16 credit unions, as you could see from the data, less than half, 7 of them command 86% of the business, and therefore the maths is clear. So the leadership, this is what this whole forum is about. The leadership needs to take stock that the market is not waiting for us. We've frankly been lucky with the exit of the foreign banks. Let's talk, real facts. Right. And we've been also lucky with some of the postures of some of the commercial banks in terms of fees and service, etc., and accessibility, responsiveness. But we do also need to bring up our game and basically not be liming in the market in that response. So the services need to be aggressive and we need to sell them as against wait for people to buy them. And you'll be amazed the kind of shift. Because the lending, the portfolios in most of the credit unions are under some stress. The growth rate is also slowing down. But the point is that comes out of COVID to some extent. Because of that situation, we need to change gears and find new tactics to get those products out. Hope I've answered the question.
Mr. Edwards, before you leave the podium, I want to just dive in a little further on your suggestion for partnership and collaborations within the credit unions. And these are discussions that are also being had with the larger financial institutions. And they are not particularly willing to go that way of collaboration for reasons of competitiveness. What makes the credit union movement different in terms of the approaches that could be taken to get the leaders to recognize the benefits, including the economies of scales that could be realized if those collaborations take place, particularly as it pertains to like digitization and buying softwares that would facilitate more efficient services, that sort of thing. What is different about this movement that can be done to go that way when we have larger institutions not particularly willing due to competition?
Two factors. The philosophy that defines us and the principle which says we could do better credit union to credit union business. And secondly, good business sense. It brings the cost down. It enables us to reach more people. And it enables us to grow wealth among the members and their families. So that's a good enough justification. The block is ego. Not only individual, but corporate. I still want to keep my name. Huh? The founders of X were there, and therefore that name shall not be changed. So we want to keep our epitaphs, but at the same time, our growth is incremental as against, explosive. And the market, in a sense, sometimes allow for good growth, but in other circumstances, it could be kept down. And we've said already that the other players, not just the commercial banks, there's a rule for the commercial banks, but there are other players who are much more aggressive and who are much more concerned about for profit. And the point then is that the credit unions have to be much more, in a sense, efficient to be able to make larger returns for redistribution. That's what defines us. We redistribute wealth to the owners. And that's what member-centric is about. It's nice to hear everybody now talking financial inclusion. That's credit union. We are supposed to be a financial inclusion, but more and more of the other players are taking our, in a sense, our values and utilizing it against us. My last point is simply this. We are the best for the last at least 40 years. We are some of the most effective branches of the banks. Zeph made the point. Bankers love us because we bring them liquidity. Simply put. And therefore, this question of competing with the banks, etc., needs to be re-examined. Until we begin to paddle our own canoe, as the credit unions in the US and Canada do, that they have a corporate credit union which does our trading, then we could then be talking level playing field and being able to grow at a more dynamic rate, at the same time speak to a sector, because we're not at a sector. We're still a movement and quasi an industry. But until we have the third and the second levels owned and controlled by the system, then we can speak in terms of being a sector. Thank you.
Thank you, thank you. Do we have any questions? Thank you. I think we will take one question following yours, and we will wrap up.
Beverly and Poyot, Genou Credit Union. Mr. Edwards, for you again. In speaking of education, well, Mr. Francis also mentioned it. In speaking of P5 education, bringing our members together and informing them, teaching them, giving them all of the information necessary for us to take that giant leap forward. How do we really get our members interested in forums such as these? Many, many times we plan these forums. We use traditional methods. We use updated methods, social media and all of that. But our members only seem to be interested in dividends and patronage refund. Classic example, our AGM was a bit late. And all the calls were, when am I getting my dividends? When are we getting this? What can we do to shift the mindset of our members?
Beverly, I would say KYM, know your members. There's no easy answer. I mean, an exercise like this, which is so important, look at the turnout, fine. But we don't stop. You gotta keep at it. And we're using the recording, the electronics to get it out to the members, hopefully. But there are some credit unions whose meetings are well attended. There are others which are not. And it's about how you plan, schedule, and market it. We have to use our media. If we are of that size, 20,000, 50,000 credit union, we have to use the mass media. Credit unions are not visible in the public domain. I mean, let's face it. We shy of the mass media. News is free. innit? You may have to pay a few dollars for a community or an ad, but the point is it's basically free. So our visibility is also part of the question. But mobilizing people should be part of our business because they're our members. Of course, you know, they're members, they have an account, but at least getting the house full should not be a difficulty. And some credit unions do it well. Others don't do it so well. So a lot has to do with reaching out to them. It's the same way in terms of the outreach to members who don't come to the credit union. When you look at the long lines during COVID, you wondered, as in the airlines, Zeph is an airline expert these days. But the point is, in the airline business, sometimes you're on the line, and a person comes down the line trying to sift out what you want. Some banks do it. While the persons were in the long queues during COVID in particular, we put shelters. But did we go down the line with a device to show them how they could use the device to utilize the ATM or the online better? There are credit unions in Trinidad who have done that successfully. That's part of the engagement, the sensitizing. So the phobia in terms of using the ATM or using the technology can go away if we engage. You get a youngster to help them to do that, and you'll be amazed at the change in the thinking. So I'm just saying there are ways and means to get to them. And the meeting doesn't have to be fully in the room. You could have meetings at the different communities. Your credit union is a workers' credit union. These people work somewhere. Ask the employers to give you a 15 minutes on the floor. Isn't that how credit union started? We went to the workplace, like the trade unions. But we have become stoosh a little bit. Because we have big buildings and we have the desktops. So we need to get out there. I could tell you, in Australia, there's no office for a loan officer anymore. He or she has to be on the road and bring in the loans. Sales, thank you. You have the laptop or whatever device and you hit the road, find the members. And that changes it. And as I've said, they are paid on commission. That's the other factor. They're not paid a salary every month. They're paid on commission. Base salary plus pay for performance. So there are ways and means to change the game. And it's within us. We are autonomous institutions, just like we are an independent country. But we're not utilizing that. You want to become republics too, but I'm saying you're not fixing the basics. And it is within us as leaders to do so. I think this forum is important, but we need to bring more of the other leaders together to discuss, because it's the same story all around. Thank you.
Thank you. Thank you. Thank you so much. SLUWCU talks. Foundation has been set to move forward, not necessarily in this same sort of setting, but rather, I like to say, some working sessions. There are a few things that need to be thrashed out in terms of how to move forward with some of the things that you would like to see happening. It is important to identify, list, prioritize, and see what is most important to pick at, deal with the low-hanging fruit, and press forward, but not in such forums where we just deliver speeches and ask questions, but put the pen to paper, do those working sessions, and come out with something that can be implemented. And I heard the question from Janou in terms of a concern for reaching out, legitimate concerns. How do we challenge those things, target those things, and deal with them? You may never get the outcome that you're looking for fully, but we can get some change. As a member of the Janou Credit Union myself, I am interested in dividends. I am interested in dividends. This is the fact. But draw me in to be interested in something else. Do something to make me interested in something else. And I say this to every credit union that I participate in discussions. Target me too. And I say me too, because at times we target one set of individuals. So we need to fully assess what our complement is like, our membership complement is like, and target them in different ways to get the results that we're looking for.
Gregory Fletcher, Credit Union, Workers Union. With all that's going on here right now, the league, I'm talking about the clearance. What's the use of the league? Isn't that thing the league should be picking up and go along with it to indulge all the other credit unions where the clearance is concerned? Got the clearing of the house?
You have a legitimate question, but the league comprises of all members of the credit unions, and so it has to be dealt with as a body, not just the league. So it is important that tonight we have had those discussions coming in, and the onus is on the leadership, the different leaders of the different credit unions to come together and follow through with what is required. At this moment, I would like to introduce the manager associated with the St. Lucia Workers Credit Union, the lady behind and her team behind CU Talks, and give her an opportunity to thank you all for being here with us this evening.
Pleasant good evening, everyone. Let me say thank you very much for showing up and showing out. Thank you so much. I know that it is Credit Union Month, and every credit union has a lot doing, trying to put your programs together for your members. But I really do appreciate you being here this evening. On behalf of the Board of Directors, management, and staff, we want to thank you for being part of this very first forum of Credit Union Talks. I'll just tell you a little background from it. It kind of popped out of what we have, TED Talks. We said, okay, why is there just TED Talks? Why can't we have our own talks? Because there's a lot for us to talk about and a lot for us to do together. And so we decided to have this forum where we're bringing all the movers and shakers basically within the credit union movement so that we can share our ideas. We could talk about what concerns us. We could understand what each other is doing and where our strengths are and where our weaknesses are, that we could, tap into each other, because we do believe that this movement is built to last. And we are the ones to ensure that it lasts from generation to generation. The legacy that we're going to leave behind is the sustainability of this organization, this movement called the Credit Union Movement. And I want to challenge us, each and every one of us, to see this not just as a business that we are either a part of or we are directors or managers of, but that it is an organization that has been positioned to change lives. And we have that power within our hands to impact lives, to change lives, and to set people's lives on a new trajectory by what we do now. And so I really want to challenge us to see this as an opportunity for change. Positive change. And out of the presentations from Director Tracy, from Mr. Edwards, and also from Mr. Francis, I picked out a few things that I just wanted to share. Leadership. Leadership is big for me. And Mr. Edwards stressed on the type of leadership that the credit union has been known to have, where we have the revolving door of leadership. And we need to move away from that. We do appreciate everyone who serves and everyone who's willing to serve, but at the end of the day, in order for us to be able to move forward and for us to evolve, we need to be able to ensure that persons who come on, first of all, have the passion, have the understanding of the movement. And I think that is what we are losing, the understanding of the movement. And Mr. Edwards, I want to again speak to Carib DE. because CaribD has been one program that has grounded us. All of us who have gone through the program have been grounded in the credit union philosophy and the credit union movement. And so I would encourage that we continue to tap into that program and ensure that as our staff, our executives come through, volunteers, etc., that we allow them to go through that program to get an understanding so that they could better serve. The other program that I want to mention is out of the Credit Union Transformational Institute. Many of you may not know about it, but it's an institute that has been set up, again, to build the leadership of the organization. And it is part of an organization called International School of Greatness out of Canada. We've been doing a lot of work with SLUWCU to ensure that the leadership of credit unions is strengthened. And so I would encourage you to find out a little more about that and for you to tap into the directors' programs that go on, the leadership transformational programs that go on, because we need to not just see ourselves as the credit union movement, which has, survived over the years with just our members coming on the board and just, going through the motion and everything like that, and we have a passion, we have a heart for it. But we also need to have the desire to be qualified, and I use that word because Melvin always says fit and proper. Be qualified to make those decisions. Because the numbers I'm hearing there from Melvin, in terms of the size of assets that we are responsible for as a movement here in St. Lucia, we cannot take it lightly. And therefore, we must see the need for a P5 is absolutely essential, not just for our members, but for us. We have to remain relevant, and we have to ensure that our education on the credit union movement, the space that we operate in, is very current. And so I would like to encourage us as leaders, because every one of us sitting here is a leader within the credit union that we are part of, and I would like to encourage us to take our leadership very seriously. The other one is services, selling, going after our members. There's something that I took from the banks, and that is having account managers. That is big. And I would like to encourage the credit unions, rather than sitting and waiting for your members to come to you, create account managers within your organization and let them go after some of your members and to call them, speak to them, find out what's going on with them, tell them about their products. You would be surprised how much feedback that you're going to get. It's also going to help you know what products and services to develop. As Mr. Mitchelson Phillips was asking, what are the products and services that we could put? We would get that from the members also, as we create those account managers and we put we send them out to speak to our members. The other one I just want to mention quickly is the co-op model. I think I shared that with Melvin when I went over to Canada DE. The co-op model, we lost it here in St. Lucia. And in a number of Caribbean islands, we lost it, and therefore our leveraging power has somehow been crippled. Co-ops work. Co-ops work, and it is something that we as a movement need to sit down, come to the table and talk about again. Because I see how it benefits the credit unions in Canada, in Trinidad, in all those other places. They still have it, but we have lost it. We have just totally sidelined co-ops, and we have just gone into the credit unions, and this is where our focus is, but we need the co-ops also in order to help us advance the cause. So it is just things that I believe we need to start taking time to think about and also re-examine. And I just have one question, I don't know how we're going to answer this, but I have always been of the mindset or the knowledge that members could only join at least, well, I thought of 3 credit unions. Well, you're saying 2, and I'm happy for that. However, recently, I had a challenge with one of my branch supervisors who was told by persons who are supposed to know better that no, there's no cap. You could join as many credit unions as you want. And that disturbed me seriously. It disturbed me seriously because there are persons who are with more than one credit union, and that is very frightening. Because what's going to happen is that they're going to go through each of the credit unions and take loans and do different things. And what's going to happen? They have all this debt all over, and how do they manage it? So, yes, delinquency increases even with that. So, again, as credit unions, we need to be on the same page, and we need to have each other's backs. And we need to be able to stand and, recognize that we need to safeguard the movement itself, and not just any person who comes because we want to increase membership, that we just take the individual. So for me, I just want to just echo the sentiments that have gone out, that we are a movement, that we have responsibilities. But also, even as regulations come out, let us come together and talk about how it impacts us. What can we do? How could we position ourselves? How could we stand and continue to be the formidable organization and movement that we are? We hear about the leveraging. We need to do it. Yes, we are a sector now, not a movement. Amen. We're a sector now. And so let us continue those types of forums. And I know that as I speak with Jermaine, we will get some more of those going on, right? Good. We'll get some more of those forums going where all the credit unions could come together and just sit and talk about what matters to us as a sector, as a movement, and where do we go? Because all we have is us to have each other's backs. So thank you, Mr. Edwards. Thank you very much. Thank you, Zeph, for being on with us this evening. And thank you, Director Tracy Polius, for agreeing to be on with us even at the last minute. Thank you very much. And also extend our thanks to Governor for releasing you to do this presentation with us this evening. And once again, thank you, everyone.